Did you know you can use your tax-free savings, retirement plan savings to invest in real estate? Hi, my name is Darren Wright, your real estate investor. So what is an RSP tax-free savings account? So when you're young and you're working, you're earning quite a bit of money, you want to put some money away for a retirement plan. So what the government have done, and this is in Canada, they have allowed you to take some of your salary and put it in a tax-free savings account, which means you're not paying taxes on the money that you're putting in this savings account. It's for your retirement. There are conditions to this. You can't draw the money early, it is tied up, and when you do eventually start taking this money out, it is taxed at that time. But normally when you're retirement, you don't have as big an income, so you're paying less tax on that money you could have earned. So it's kind of a way of deferring taxes until a later date. And I would always advocate for delaying paying taxes as long as possible, because as we know, money deteriorates at around 3% a year. So if you have a tax bill of say $10,000, if you pay it in next year, you're actually paying 3% less than the $10,000. It's still $10,000, but in what the value it is worth. So always think about that. So the longer we can delay it, the better. But there's some great plans you can do with this money. You can invest it and take care of this, and obviously want it to grow as much as possible. Now, typically, people leave this with a bank in a mutual fund, and a mutual fund usually buys shares on the stock market, and is spread out over lots of different people and lots of different companies. So you spread the risk, you spread the gain, and it's managed by a fund manager. And what I never liked about these funds is the fact that the managers still get paid their money, whether it's made money or whether the fund has lost money. And when I had it and it lost money one year, and they still took their, whatever it was, $2,500 out of the fund, I thought, no, I think if you lose, then you shouldn't get paid. That's just what was my thinking about it. But I didn't know at the time, but what you can do with these funds is you can actually move them to a self-directed account. So you are in full control of where your money goes. And what we can do with that to invest in real estate is you can self-direct that fund and keep it in a trust company. So the trust company looks after your money and your interests. And then what we do as investors when we're buying property, we approach people, or we have a relationship with people who have these self-directed savings, tax-free savings plans, and then we offer them the real estate deal and see if they wanted to invest in the deal. Now, when you invest in the deal, you're just like a bank, so you just invest in the money. You cannot become an owner in that real estate. You need to be of arm's length. And if you're related to the person with the savings plan, that can't work as well. The person has to be at arm's length away from you. So you do need to be in contact with each other, know each other to a certain extent, but not be related. So once you've got that, you can present them with the deal of, this is what I want, and it's usually a mortgage. So it's like a mortgage. So you're lending money to purchase that deal, just like a bank, and you're going to get paid interest on that. So typically what we do, we offer better rates of interest on that money than banks. And the reason why we do that is because normally these are a lot more short term. See, banks want to do a long-term mortgage, not a short-term loan on buying property. So we use these funds to buy a property, we renovate it, and then we refinance about with a traditional bank to get a lower interest rate and pay these people off. You can use it for flipping houses and things like that. I'm currently raising money for a land deal where we're going to buy the land, we're going to build a property, so then we can refinance that out and pay these investors off. So who's involved from the trust company is a mortgage broker. So a licensed mortgage broker has to control the lending of that mortgage. The trust companies used to do it, but that's all changed. It's by a mortgage company now. And then we have a lawyer involved as well. So all this is above board. There's never any shady deals. There's a lot of guarantees. But is it risk-free and is the money guaranteed? No. It's just like banks. They lend money out, they're not guaranteed to get paid back. So what could happen with an investor? So let's say an investor borrows this money enough to do the purchase, the renovations, and then he's going to sell a property. Well, if they don't sell a property for enough to cover the costs and the interest, then there's going to be a shortfall. Now the investor has to put that money back in for a shortfall, but if it doesn't, then it goes back to litigation and things like that. So you must be aware that there is some risk involved. So it's how well do you know the investor and how well do you know the investment? Have they done it, has the investor done it many times before? Is this a good investment deal? You don't need to know everything there is to know about flipping in order to, to get involved in this kind of deal, but, trusting the person and goes a long way. Is the property valued at what it's valued at? Make sure there's the trust companies need an appraisal as well, but you need to know as well if you have an idea that it is around what it should be, So if you need more information on this or you want to sit down and have a chat some more, maybe deals we have coming up, if you want to invest with us doing this type of deals, then reach out. I'd love to chat some more.